let us look at the statement in greater detail. And what we are doing, we are understanding this income statement or P&L statement. Remember, whether you call it income statement or you call it profit and loss statement, both mean the same thing. So we are understanding it from the perspective of our own company, that in our company how the P&L is prepared and how it is looked at. So the first thing that we need to understand is what we have. We have the revenues of products and services. And from this revenue, so that means whatever products that we make, whatever services that we extend, what we do, we earn revenue, and from this revenue we deduct certain expenses. So which are the expenses that we deduct? We deduct the raw material cost, and we deduct the consumables, freight, packing, overburden, stripping. We deduct the energy and electricity. We deduct the production wages. We deduct the depreciation, provision and maintenance, and we also deduct the mineral reserve depletion. So from this revenue that we have earned by the company, what we do, we deduct all these expenses on this side. So when we deduct from the sales of products and sales of products and services, that is our revenue, our income. When we deduct all these expenses, the material consumption, consumables, electricity, production wages, depreciation, mineral reserve depletion, what we get in our hand is known as gross margin. And please remember, in our company we call it as gross margin, but otherwise this number is also referred as gross profit, and this is for your additional understanding. And why additional understanding? Because in case somebody is talking to you and he is using the term gross profit, you should be aware as to what is he meaning is only gross margin. So that's point number one. So from the sales, from the revenue that we have, from the sales and the services of the product, we deduct all the expenses. What we get in our hand is gross margin. Now from this gross margin, what do we do? From this gross margin, what we do is now all these items put together. Please remember, these are also known as cost of sales. So when somebody is saying what is cost of sales, so cost of sales would mean total of raw material cost, consumables, freight, packing, overburden, stripping, electricity, energy and gas cost, production wages, depreciation, provision and maintenance. So all of these put together is referred as cost of sales. So in other words, what we are saying is, we are saying that revenue from sales and services minus the cost of sales minus the mineral reserves depletion, and what we get in our hand is known as gross profit, and that is what we should understand. Now, so what in brief what we are saying, from the revenue that we earn, we minus the cost of sales, and from the revenue that we earn, when we minus the cost of sales, what we get in our hand is gross margin or gross profit. Now what we do, from this gross profit we deduct three other costs. And which are those three other costs? Those three other costs are: number one, research and development overheads, sales and marketing overheads, general and administrative overheads. So from the gross profit or gross margin, when we deduct all these three expenses, what we get in our hand is known as current operating income. Current operating income, COI. It is known as COI, and it is also known as EBIT, earning before interest and tax. Please remember, this total of these three put together, that is total of research and development, total of sales and marketing, and total of general and administration expense overheads. Now these three items put together are also known as SG&A, selling, general and administrative expenses. So what we have understood so far? We have understood so far as to what is gross profit, and we have understood what is current operating income, COI. And how do I get the gross profit? I get the gross profit, and please pay attention, I get the gross profit by deducting cost of sales from my revenue. I get, and my mineral depletion cost, and what I get is gross profit. From the gross profit, I deduct the SG&A, selling general and administrative expenses, and the selling general and administrative expenses will comprise of the R&D, sales and marketing, and general and administrative overheads. And when I deduct the SG&A from my gross margin, what do I get is current operating income, which is also known as EBIT, earning before interest and tax, or it is also known as COI. So if you have any question on this, please go ahead, and then we will move to the next slide.